Rakesh, hi, good morning. Thanks for joining in. Rakesh, strong rebound trade that we're seeing across metal names on back of Chinese PMI data, seeing an uptick. Do you feel like this recovery across China, the US, India is here to stay, and that could mean a sustainable uptick for metal stocks from here on?
So apparently things are, falling in place for commodities. And on one hand, we are expecting interest rate, cut cycle to start in US. And as you mentioned, that PMI data has been surprising positively, not just China, but even Eurozone and even US. So demand should be better than what it was in last year. But having said that, what exactly comes out of China is more important than what goes in. And China has been exporting quite aggressively. So in the first 2 months of this year, Chinese steel export is up 23%, which already was like a 7-8 year high last year. So China is exporting quite aggressively. And this is not limited to commodities, but even, finished product. It is estimated that around 12 to 13% of extra steel production is being exported out of China in form of, EVs, renewable solar power panels, etc. So China is aggressively dumping material into global market. So I'm not really sure if this rally has too much of legs. There is support at the bottom, and maybe it will inch up commodity prices. But it's not a full-blown rally that we have seen, say, pre-global financial crisis or even during the COVID period.
Of course, the last time we saw the commodity super cycle was all the way back in the mid-2000s. And now what we are seeing is prices of iron ore, steel, coal, natural gas that are rising quite sharply. But Rakesh, if we had to make an investment call, maybe for the next 1 year, I know stocks like Tata Steel do trade at a record high. Would you buy metal stocks today?
So,
and if yes, which ones would those be?
Unfortunately, Indian market has been on a kind of a strong bull cycle, and all these metal stocks have also benefited out of that. So valuations leave hardly anything on the table for the investors. Most of these stocks are now trading at multi-year high price to book levels, whereas sustainable ROEs haven't really improved as much. So I think risk reward ratio for metal stocks at these levels doesn't look that exciting.
Doesn't look that exciting. And also, what did you make of those numbers that came in from MOIL, Hindustan Zinc and NALCO? I mean, MOIL has had one of its best months, year-on-year increase, quarter-on-quarter jump. Are these green shoots? And if yes, would MOIL or Hindustan Zinc be a stock you would buy? These counters, of course, trading higher today.
So, there's a little bit of bullishness around commodity stocks. And I don't think Hindustan Zinc or MOIL can increase production as aggressively. It is not as easy for mining companies. So I would take it like a one-off, it's not a sustainable trend. It's not that the volume growth is going on to a different orbit.
Right. Thank you, Rakesh. It's good to hear that your opinion on it, because I feel like the markets may be getting ahead of themselves, but it's a trading prop from what it looks like, at least across the metal universe. Whether the recovery in China is here to stay, Rakesh says, may not be just yet. But of course, good support coming from metal names. And remember, the last time you saw a super cycle across commodities was all the way back in mid-2000s. So you are seeing an uptick in prices such as iron ore, coal, natural gas. But of course, how much more from here is yet to be seen. The metal index today outperforming the benchmark, up nearly 1%.